And leave it to contrarian badass Reggie Middleton.
Reggie walks in looking really cool. He's got a Google Glass on, and I'm like, man, that's cool. And
did he walk like that?
Yeah, he walked like that. That's how you walk if you've got Google Glass on. Everyone walks real cool.
He called the housing crash. He called the collapse of Bear Stearns and Lehman Brothers. He's been harping on the crisis in the Eurozone banking system for years now, so he's just the guy to talk to.
Reggie Middleton.
Reggie Middleton.
Reggie Middleton.
Oh, he doesn't mince his words. We're talking about Reggie Middleton.
Ooh, it's Reggie Middleton.
Greetings all, this is Reggie Middleton. Doing a video update of the blog post that I've been making at Favoritism. In particular, we're going to discuss Deutsche Bank and Deutsche Bank's subsidiary, Xetra Gold. Xetra Gold is a entity that sells gold derivatives, basically notes that are backed by the promise to track gold, but not exactly. Basically, what Xetra Gold is an IOU to pay a value that has, to pay a value that is somewhat calculated by the price of gold, but whose value primarily rests within the popularity or demand for the note itself, with the note itself being marketed as a gold product. Now, if that sounds slightly confusing, or if you heard me stumble, it's because it is confusing. I stumble because it's very difficult to try and explain how this is related to gold whatsoever outside of marketing. And not only am I the only one that has a problem doing it, and I know what I'm doing, but it appears that the auditors, the legal counsel, and the marketing department of Deutsche Bank subsidiary Xetra Gold has a similar problem, because their website says gold this, gold that, pretty lady on the front with gold bars saying investing in gold is XYZ, etc. Of course, the prospectus says something very different. In the beginning, it says, from an economic perspective, it is as if you're invested in gold. Okay, but it says this does not track the price of gold specifically, and I'm paraphrasing, not word for word, but I will put the actual text up. It also says that the price of Xetra Gold notes is dependent not only upon the price of gold, but also on the demand for the notes itself. The value and the price is also affected by liquidity for the notes. The notes may or may not be continued to trade on the exchange, I think in Frankfurt, and a bunch of other warnings, caveats, etc. Long story short, this is not gold. There's no correlation to gold, and that is a quote from the actual prospectus. And the website and or marketing material says that, of course, you can redeem these notes and call the physical gold. Now, there's an article of someone who tried and failed and going through the prospectus, lo and behold. So you have significant bait and switch here. As a matter of fact, it looked a lot like fraud to me. So what I did was I decided to look up the jurisdictions of which investors were able to buy these. And of course, they're not legal in the United States under SEC law, which is a little stringent. But of course, in Germany and Britain, they're available. So I looked up the UK fraud law for Fraud Act for 2006. Lo and behold, they seem guilty of fraud. Alas, I'm not a securities lawyer, a litigator, or any type of lawyer. I'm not a legal expert or a legal eagle, but a lie looks like a lie, Misrepresentation looks like misrepresentation, and fraud, from a layman's perspective, looks like fraud. I'll leave it up to you to decide. I'll include, you simply go to the Veritasium blog and do a search on Xetra, Xetra-Gold. Look for yourself, okay? Now, as for what this has to do with Deutsche Bank and apparent fraud, well, you see, Deutsche Bank seems to be getting in a lot of trouble. There's a whole list of lawsuits, which you see on in that article. In addition, if you look at their actual financial reporting for the year 2015, they're rife with fraud. And this is coming directly from their documents. As a matter of fact, their incidences of fraud and their economic risk-weighted capital attributed to fraudulent acts, both external and internal, have at least doubled. As a matter of fact, 2015 has more risk according to internal and external fraud than the previous 5 years. Not an incidence in the previous 5 years, but the previous 5 years together. What in the world is going on with this bank? Because if you have a price of $100, nominal market price, you have a established fundamental value of $8. That is a $92 spread, $92 economic spread. Now, if astute speculators or true real investors want to take advantage of that $92 economic spread by taking short positions, puts, CDS, etc., you can. But that begs the question, how do you get the market to realize the difference between $100 nominal market price and the actual $8 economic value? Well, hardcore forensic analysis, real analysts, not that regurgitate what management says, not that work for an entity that is actually part of the problem itself and truly do not want to reveal any facts. Because if we think about it, how many sell-side analysts said short Bear Stearns, how many went after rating agencies, et cetera, et cetera? Practically nobody. And the reason is, I'm not picking on the analysts on the sell side, their business model is basically to support their employers. That's why they're employed by the employer. If you had an independent agency or independent group who really had the chops to do forensic analysis and expose this economic $92 spread, why are we harping on Deutsche Bank? I'm using Deutsche Bank as a marketing mechanism for our analysis. You see, everybody knows that Deutsche Bank has a problem. What they don't know is that these problems run deep. They scar, and they scar hard. What they also may not know is Deutsche Bank's counterparties are going to get dragged down right with them. Now, this is interesting because if Deutsche Bank is so fraudulent or misrepresenting so many clients, why don't the regulators go after them? Well, there's a theory that is being propagated by some fairly convincing intellectual people that there are protected 30 banks, and these protected 30 global banks are untouchable from a criminal perspective. You can name the top few banks. I'm not going to go in and name them, but take a guess. Just look at the library charges. Look at all the criminal charges that have been brought, and look at which banks did the most damage economically, and then look at which banks had no criminal prosecutions whatsoever. And you could guess which of these protected banks. Think hard, okay? Now, once you get below that 30, it's open season. But above that 30, according to this individual, who should have no problem being named since he has many videos everywhere, but since I didn't ask permission to spread and propagate his theory, he will remain unnamed for now. But, so if you can't, or if they don't, the regulatory agencies and the governments and the enforcement agencies and authorities do not go after these banks, well, then what recourse are there? Well, so enter the discovery of an independent entity that had the intellectual chops, the ability, and the impetus, the drive, the motivation to identify and publish this economic spread, $100 market value versus $8 fundamental value. You have the discovery of significant alpha. These hedge funds, family offices, individual investors, astute traders, I can do that for you. Remember, strong track record, Bear Stearns, Lehman, etc. And look at what I'm exposing with Deutsche Bank, right? Deutsche Bank is a freebie that I'm giving out, so you come in and subscribe to the other analysis, primarily Deutsche Bank counterparties. This is something that is sorely needed. This is the economic model that financial analysis worldwide, but particularly in the US and in London, should be based upon. But unfortunately, the vast majority of analysis is powered by sell-side institutions who, of course, have extreme and significant conflicts of interest. I don't have it out for sell-side institutions, but listen, the fact's a fact. That's why this entity is called veritasium, from the root word veritas or veritas, Latin for truth. We are the element of truth. Okay? This stuff on Deutsche Bank will blow your mind, guaranteed. And if you think we're going this hard on Deutsche Bank, imagine what we're doing with the others. We have the banking situation, the EU banks done. We have other financial institutions. There's also cracks in the US and Asia. We have a big technology short. We have technology longs. This is going to be very, very interesting third and fourth quarter. I'm sorry. Very interesting fourth quarter. Third quarter is gone. Going into next year. Okay. Again, simply recap. We are going to expose the truth. The difference between market value or market pricing, because pricing and value are definitely not necessarily corollary and synonymous, and economic value. We are going to expose truth in Deutsche. We're going to expose truth in many other banks. Okay? And this goes to show that you don't necessarily need the government to pursue criminal investigations or prosecutions, or even civil investigations or prosecutions. We're going to see if we can get the market to extract vengeance. And the market can extend past actual equity and fixed income pricing, because I think once a certain amount of either misrepresentation or fraudulent activity comes to bear, you're going to have the litigators come in. Okay, and this is civil litigators on the private side. I get the feeling lawyers would like to do some lawyering, but just in case, I got your back, speculators and hedge funds. Come alpha with me. Peace.